A collapse of the monetary system is quite overdue as debt has eroded any savings, caused governments to spend beyond their means, all while the bankers have gone completely out of control. There will be a new system, and you will be a part of it. But the truth is that it will be more restrictive and certainly much worse than the tyranny we find ourselves in today. The question is, what will you do? You came here for the truth, so let me unveil that for you. We're going to talk about the stock market cracks that have hit levels from the financial crisis. These are plenty. We don't have to look too hard to find these type of statistics these days. However, we'll go on to this here article out of Reuters entitled "No Gift for Wall Street on Christmas Eve." As you look at 9 of the 10 S&P sectors declining, obviously they seem to be in sync with each other as they all decline downward. Now, further along, we had the highlighted portion. The consensus is that the Fed is going to raise rates pretty slowly and that the economy will be able to absorb those rate hikes. I don't know where they're getting this information from. Perhaps they should check out the Money GPS YouTube channel and see the truth, because we know this isn't the case. Look how bad the stock market overall has performed in 2015. So you had all of these trillions of dollars of stimulus headed through the system. You had the TARP bailouts. You had every possible means to pump this system up. Low interest rates all this time. And now you want to bring it up so incrementally, and you have to pray, hope and pray that it continues. At the bottom they said, so the first thing next year will be to track the path of that economic growth. I do agree that you need to track that path, and you need to monitor it consistently. Every single day you need to figure out what's happening and gauge it as it happens. But what they're suggesting here, that even though we're where we were a year ago in the stock market, that they're going to be able to absorb the shock. Look at all of the reals. Forget about the stock market price. Look at the actual real indicators that I've always been talking about, and you'll know this is nothing but propaganda. Let's look at this article out of the Telegraph. Switzerland will hold a referendum to decide whether to ban commercial banks from creating money. Now, I personally don't know all of the laws, all the ins and outs of the Swiss banking system. You may be able to inform me on this. What I wanted to note is that they've done things like this in the past. Even what they say Canada's bank, central bank, is owned by the people. But we know that that is a lie. That is confirmed to not be true. Yes, if you say it's owned by the monarchy, or say it's owned by the government, or some very generic term, then sure, if you want to play games. But when there's no transparency, as far as I'm concerned, then they don't work for the people. Because if they did work for the people, the information would be shared. It would be there for the people. Think about all the criminality that goes on with all of these organizations, with the CIA, for example. How much illegal activity are they guilty of daily? As you look at this campaign, they had the Swiss Sovereign Monetary Movement designing to limit financial speculation by requiring private banks to hold 100% of their reserves against their deposits. I wish every bank all over the world would have this law put in place, that the banks actually need to keep money in the banks instead of using that as an asset towards their schemes. Banks won't be able to create money for themselves anymore. They'll only be able to lend money that they have from savers or other banks, said the campaign group. Very interesting to see what will happen here. I'm definitely going to keep my eyes on this. defying Fed hike. 30-year mortgage rate slips to 3.96%. The first thing I'd like to mention is that it was only at 3.97%, but essentially what they're trying to say here is that while we should have expected the rate to go up, it actually dipped down slightly. One of the points that they mention here is obviously very true, and is that the Federal Reserve can't directly bring down the rates. They can, sway them in a particular direction, but they can't necessarily force that downward or upward. They can print a lot of money and get it to move, but these type of interest rate swings, when you have it being virtually zero, doesn't really have as much of an effect directly. It might take a little while. From my book, I talked about this that I find shocking. The average savings rate in the 1990s in the US was 5%. While that seems low, it's actually progressively worse into the next decade. Where we are at today is near 0%, depending on the calculations used, depending on which stats you look at, but you can essentially say 2% or less. And that to me is very, very shocking, because without savings, what do people do when they need to buy things? Well, of course, they can wait to get that money that they need, but oftentimes they end up racking up debt. This is not good for the future. You might think, whatever, let them do whatever they want. I'm saving my money. There's a credit bubble, and guess what? Bubbles pop. That pop action has a ripple effect, and it will affect you even if you're not partaking in that, particularly when you're not self-sufficient. This right here, we're talking about oil. You've seen the price of oil. I've covered it here. It is not doing so well right now, that's for sure. For American drillers, the new year will likely bring more of the same: financial pressure and mass layoffs. The Dallas Fed estimated in a new report the nation lost about 70,000 oil and gas jobs since October 2014. So essentially 1 year. That's a 14.5% drop. That is a massive swing. What does that tell you? If this was the financial industry and they lost 70,000 jobs, you would definitely see this on the front page. But for oil, you find it sort of not really being talked about, the amount of people that are currently unemployed in this sector. This is huge news, and this could happen with any particular commodity as you see people's jobs being lost. Now, what do? Do they sit around and hope for the price of oil to increase so that they get hired again? Or do they get into different types of work? Many at this time would opt to just sit and wait it out, hoping. But the days and the weeks and the months go by, and this is what we've seen since the financial crisis in particular. Look at the housing industry suffering big time in certain areas such as the US. And last but not least, I'm covering what's happening with robotics, the positives, the negatives, and unfortunately, here's another negative. For the first time, a Chinese news channel has employed an artificial intelligence robot as a weather reporter in his live breakfast show, raising concerns among the country's journalists as it could threaten their jobs. And it will. This is the type of thing that can easily be replaced with, for the most part anyway. And this robot is actually a piece of software developed by Microsoft using smart cloud and big data, and that information is being collected right now on myself and you on the other end of this. So we'll have to see how it all pans out. If you found this video informative, please give me a thumbs up. Last but not least, you'll definitely want to check out my book. If you go over to Amazon, they have this look inside feature, which allows you to flip through the pages of the book and see if you like it. Take care.